Hello, I'm Mark Patton. In this short video, I'm going to talk about a topic that I think is very important to investors, which is investment performance. What I find when I do research on my competitors is that they tend to not talk much about performance, but tend to talk about all these other things that I think are very obvious client expectations. Things like trust and integrity, customer service, protection from fraud. I think that these are all client expectations, but they're the obvious things, and they seem to be the things that our competitors talk most about. My question is, why are they not talking about performance? When you start to do some research and looking around at our competitors' websites and information out there on the internet, what you find from our competitors is that most of them, when they talk about investing, they talk about things like philosophy, strategy, theory, research, goals, and so forth. These are topics they talk about when it comes to investing, but what about performance? I've done a lot of research on this and a lot of searching, and you are hard pressed to find any investment managers out there that are providing information on the performance that they're producing for their clients. Now, there's a lot of information out there and a lot of performance data out there on individual funds, but what we're looking for is the performance that clients are getting when an advisor puts together multiple funds in a portfolio and the return that that investor is getting on that total portfolio. That information is very, very difficult to find. So through all of our research, what we've found is that there is one great source of this information. We can't find any other information out there. The source that we found is what are called private client indexes, and they're put together by a company called Asset Risk Consultants. You can Google this and find their information. Again, these are the only indexes that we can find with information on our competitors' performance when we talk about a total portfolio performance. Again, a lot of information on individual funds, but not on total portfolios. A few facts about these indexes that are put together by Asset Risk Consultants. There are 85 contributors, and I'll show you a list of some of those in a moment. 130,000 plus portfolios in these indexes, so they're a broad brush of many investors' portfolios. They're reported net of fees, very important in the industry, and there are 4 different indexes they've put together. So there are 4 different PCI indexes based upon different risk levels or risk profiles. These are great indexes, like I've said. Some of the contributors to these indexes would include firms like Barclays, Citibank, Credit Suisse, Deutsche Bank, all very large names that are household names in the investment industry. So these are portfolios of clients that are put together by some of the biggest names in the industry. So with that, we compare our performance of super diversification directly on our website to the appropriate PCI index. So you can go to our website, pattonfunds.com, and if you go under Why Patton and click Performance, it'll take you to this performance page. And on this page is a graph over here on the right-hand side that's updated every single month, showing you the performance of our super diversified portfolio compared to the PCI index. Now, we call this the average private client because that's what the industry calls this. But if you click on the help, you'll see that the average private client is the ARC, the Asset Risk Consultants Private Client Index. And we've selected the most risky index for this particular comparison because it's a growth-oriented portfolio. So this is an appropriate index, the best that we can find in the industry compared to our super diversified portfolio. And you'll see that over time, the spread between our performance, even when you look at it cumulatively in a line graph, it becomes more obvious. When you look at the performance of our super diversified portfolio compared to that private client index, which is their most aggressive growth-oriented index, you'll see that there's a wide margin between our performance and theirs. We really cannot find other portfolios out there that are performing as well as super diversification. We've looked for the best data out there. We can't find it. One other comparison that we do make on our website is compared to a Vanguard index fund. Now, this is an index fund done by Vanguard that is a blend between stocks and bonds. So it's a blended kind of a portfolio index fund that they've put together. You'll see that it's actually done better at performing than the private client index indexes have, which demonstrates that sometimes often a simpler investment strategy like an indexing strategy is actually better than what a lot of my competitors put together. So you'll see that even though that's the case, compared to this Vanguard index, we've still handedly done better over time than that Vanguard index, as you can see here. So we do believe that super diversification has delivered some fantastic long-term returns, returns that are head and shoulders above the industry benchmarks out there, and we really can't find other portfolios that are performing better. So hopefully this provides you with some background about both our super diversification performance, how we've compared it to other indexes out there, and why we think it's very different than what our competitors is doing. If you ever have any questions for me at all, please feel free to get in touch. My contact information is available here on the screen, but you can go to our website as well and find the information there. Hope you found this informative. Thanks for your time.